If you've ever wondered how seniors can make sure their loved ones aren't left with heavy financial burdens after they're gone, then final expense insurance is something worth understanding. Today, we're going to dive deep into what final expense insurance is, how it works, why it matters, and whether it might be the right option for you or a loved one. So let's get started with a full breakdown of understanding final expense insurance for seniors. First, let's answer the basic question. What exactly is final expense insurance? Final expense insurance, sometimes also called burial insurance or funeral insurance, is a type of whole life insurance policy. Unlike traditional life insurance policies that can pay out hundreds of thousands of dollars, final expense insurance is designed to provide a much smaller death benefit, usually between $5,000 and $25,000. The purpose of this money is to cover costs that come at the end of life, such as funeral and burial expenses, medical bills, or even small debts that are left behind. Now you might be wondering, why is this type of insurance especially important for seniors? The answer lies in the costs that families face when a loved one passes away. In the United States, funerals typically cost anywhere from $7,000 to $12,000, sometimes even more depending on the arrangements. Without insurance or savings, that financial responsibility falls directly on the family members. For many, this can be overwhelming, especially during a time of grief. Final expense insurance provides a way for seniors to ensure that their loved ones don't have to scramble for money or go into debt just to pay for a funeral. One of the reasons final expense insurance is so popular among seniors is that it's easier to qualify for compared to traditional life insurance policies. Many seniors in their 60s, 70s, or even 80s may have health conditions that make it difficult to get approved for regular life insurance. But final expense policies often don't require a medical exam. Instead, there are two main types of policies: simplified issue and guaranteed issue. With simplified issue, you'll be asked a few health questions, but there's no physical exam. Approval is usually quick, and you can get coverage in a matter of days. With guaranteed issue, everyone is accepted regardless of health conditions. The trade-off is that the premiums are usually higher and there may be a waiting period, typically 2 years, before the full benefit is paid if the policyholder passes away. Another important thing to understand is that final expense insurance is a form of whole life insurance. This means that the coverage lasts for the entire lifetime of the insured person, as long as premiums are paid. It doesn't expire after a set number of years, unlike term life insurance. It also has fixed premiums, which means the monthly payment you start with will never increase as you get older. This stability can be very reassuring for seniors on a fixed income. Some policies even build a small amount of cash value over time, which can be borrowed against if needed. Let's look at some of the key features more closely. First, the coverage amount is smaller compared to standard life insurance, but it's designed to be just enough to cover final expenses. Second, premiums remain constant for life, making it easier to budget. Third, the payout to beneficiaries is usually quick, often within a few days after the claim is approved, which means families get access to funds right when they need them the most. Of course, like any financial product, final expense insurance comes with both pros and cons. On the positive side, it provides peace of mind that loved ones won't be burdened with funeral costs. It's relatively easy to qualify for, even for seniors who may have health issues, and it offers lifetime coverage that never decreases as long as premiums are paid. On the other hand, the death benefit is smaller compared to traditional life insurance policies. For some seniors, the premiums can feel high relative to the amount of coverage provided. And with guaranteed issue policies, there's that waiting period to keep in mind, which means if the insured passes away within the first 2 years, the beneficiaries may only receive the premiums paid plus interest, not the full death benefit. So, Who exactly should consider final expense insurance? This type of policy is especially beneficial for seniors who don't have significant savings set aside for funeral and burial expenses. It's also a good choice for those who want to spare their families from financial stress during a difficult time. And it can be a solution for individuals who may not qualify for traditional life insurance because of health issues, but still want to leave behind something to cover essential costs. To help put this into perspective, let's walk through a simple example. Imagine a 70-year-old individual purchases a $10,000 final expense policy. The monthly premium is affordable and remains the same for life. When that person eventually passes away, the insurance company pays out the full $10,000 to their chosen beneficiary. The family can then use that money to pay for funeral expenses, outstanding medical bills, or other small debts. Instead of worrying about coming up with thousands of dollars on short notice, they can focus on grieving and honoring their loved one. It's also worth noting that final expense insurance is not just for people who think they won't qualify for other types of coverage. Even healthy seniors sometimes choose this option because it's straightforward. The application process is simple, and the benefit amount matches their needs. After all, not everyone needs a large life insurance policy. For many, ensuring that funeral expenses are covered is enough. When considering whether this type of insurance is right for you, it's important to compare policies and providers. Look at the coverage amounts, premium costs, and any waiting periods. Pay attention to whether it's simplified issue or guaranteed issue, and think about your current health, your budget, and what you want to accomplish with a policy. In the end, final expense insurance is all about peace of mind. For seniors, it can be a way to take control of the inevitable and ensure that their passing does not create a financial burden for their loved ones. It may not provide a large inheritance, but it does provide something just as valuable: the security of knowing your family will be taken care of when it comes to end-of-life costs. So to sum everything up, final expense insurance for seniors is a form of whole life insurance designed to cover funeral costs, medical bills, and small debts. It's easier to qualify for than traditional life insurance. It comes with fixed premiums and lifetime coverage, and it can be a smart way to make sure your loved ones aren't left with financial stress. While it has some limitations, like smaller death benefits and higher costs for guaranteed issue policies, it remains a practical and compassionate option for many seniors. If you or a loved one are considering final expense insurance, take the time to explore your options, compare providers, and think about what works best for your situation. It's not just about buying a policy. It's about providing peace of mind and protecting your family when they'll need it most. That wraps up our discussion on understanding final expense insurance for seniors. Hopefully, this gave you a clear picture of how it works, who it's for, and why it might be worth considering.